Welcome back. Today's trade was kind of called late, in my opinion. Kind of saw this whole setup pretty late, but I still entered and made some money off of it. I do want to obviously go through it, but I do want to take you over to some analysis that I did yesterday night and notice what potentially we could be doing. If you guys remember my last video, we talked about what this week ahead of us will look like, and I said that price was either going to consolidate or it was going to do something wild before price was going to reprice, basically. What I had marked out, and I want you to notice this on the daily, it's a little better to see on the daily. I can't hide that actually. We had this swing high on the month, and if you remember yesterday, there was a little bearish candle right here that was testing this liquidity. This actually happened on Friday too, before the weekend, where it reached up to the liquidity. And so I was thinking one or two things. Either this was the point of pivot and we were going to sweep that liquidity today, right, Monday, which technically we did, but we didn't. Or we're going to come higher to this other swing high, okay? So today, what we got was a little unexpected. I will not lie. It kind of looks wild here. I will explain it in a second. Let's just hide this, not this. So what you're looking at now is presumably, like, I understand this. This was Friday price action, kind of wicked. But then off this, it created some nice disposal or distribution. My bad, distribution up. Okay, visually there is a fair value gap that is being created here on the 1 hour. So visually you can see fair value gaps created. Visually you can see that this trend. I'm pretty sure the if I draw the line here, yeah, it's right here. That's where the swing high was. So that's where it's consolidating, right? It gets rejected. It's at that level. It's pretty strong level. It gets rejected, consolidates, kind of very low price action. This is basically through the weekend. Then we get Monday, and this is where we open on Monday. And Monday, what we do is we're not trading above now. We're not contesting above. We're kind of trading lower and lower. And you notice where do we notice where we're trading to? We're trading towards this 1 hour fair value gap, which I'll have marked out after I unhide these things. And you'll see that it actually comes and tests this fair value gap here on the 6 hours, on 6 a.m. So basically the start of the New York session. That's important to note. And then it kind of comes up, trades above, and I will unhide this. It's kind of hard to see because I'm going to explain this with the quarterly theory. Oh yeah, by the way, on that, I know there was a comment, multiple comments actually I've been receiving about the quarterly theory. I know I introduced it a couple videos back, and I just haven't used it. And the problem with that is I just haven't found a way to implement it into my current strategy. I don't really know how I know how I was using it before. I was trying to find accumulation, manipulation, distribution. But it just wasn't turning out great for me. And so I took it a step back, and like in this example, it works out, pretty well, and I'll explain it. But with every other day I've had last week, it just hasn't worked out. Even on the 5-minute, I know I used to trade it on the 5-minute. That apparently just does not work for me anymore. Either I just don't understand it anymore, or the strategy just does not combine with what I use right now. That could be my problem. That could be its problem. I don't know. I'll have to figure that out. Anyways, let's move on. Again, we have that 1 hour fair value gap here that I marked out, and you can see that 6 a.m. price action. This is also with the quarterly theory, with that first quarter being created. This would be London session here, and to me, as you can see, it's just accumulation. Right, we're not closing above these highs, we're just making higher highs, higher lows, just kind of consolidating, right? And so now what I'm looking for, and this is a clear AMD setup, and you can Probably see if I just do some like this. So AMD, so you have accumulation, manipulation. Oh, what the fuck? Wait a minute. Because it's supposed to be 4. That's right. There it is. Accumulation, manipulation, distribution, continuation, or reversal. So accumulation happens here, and then you have manipulation here, but you're like, where did the manipulation happen? Right here. I'll take this out. Can you see that? It actually price manipulated its way down under accumulation here to tap into that fair value gap. Right now, this is still accumulation because in a way, this is also manipulation, right? But I do want you to notice that we are literally turning at 6 a.m. and this is when the manipulation phase is supposed to happen. Do keep in mind that this phase can happen earlier or later, right? The earlier the better. It just shows more signs of manipulation, which probably means more signs of distribution, right? It just wants to get to that distribution phase earlier. Now, what does this mean? Again, this is 6 a.m. I can't trade this, right? So I'm just looking. I'm looking. And my strategy, right? What does it say? It says that price needs to hit some kind of high time frame PD array, right? So if I'm trading on the 5 minute, then a 1 hour or even 30-minute PD array is fine, right? Preferably anything higher than a 4 hour PD array is fine, right? If you look at the daily, which is what I like to look at, there isn't really much to base it off of. Right, there's really nothing to do here. There's a fair value gap created here, but you can't take that because the daily hasn't closed yet. So I can take that. So there was nothing on the daily for me to use in that presence, right, in that time. So what's next? Next is with my strategy, I mark out the possible market structure shift, and I'm pretty sure this was seen either on the 4 hour or. Okay, yeah, so 4 hour here, you can see kind of there's a swing high that's made here. Okay, so now it starts the downtrend. So there's a lower high and then a higher high and then a lower high. And so this tells me that this high here is the most dominant one. So if we switch to the 1 hour, which I like to draw my market structure shifts, you can see that this is repellent. So swing high, swing high. Kind of lower high, then higher high, boom, and then super higher high. We break these highs over here, all these highs, but it doesn't close. So this would be the market structure shift at one point. We trade lower, and we go higher, and this is the, this is the market structure shift right now. That's the current swing high that we're getting here on the 1 hour, and then we trade lower, and there's more that creates on the 5 minute, but this is the main target. Might as well mark it like this. That's the main target for the market structure shift. So now if you're going to take a trade, or at least try to, right, what is your target, or how would you take this? Now, you got to realize where we are in the market. This happened 6 a.m. Yep. We kind of bounce up, trade, right? I'm not too concerned about this. We do make it a higher high here, which is a market structure shift on 5 minute. I was looking for that to be taken out. 825, right? This is where price kind of gets started. We're getting close to 905, 910. And then I want you to pay attention to what happens at 930. 930, boom. What do? We trade all the way down into this fair value gap. And I am most certain that there is a 1 minute order block. I haven't checked. I just know. Yeah, what I'll tell you. Oh, I don't. Okay, let me try to extend this. Okay, it doesn't hit, but it was close. That's no excuse. It was close, but price makes a swing low here without taking the liquidity, without even going for the consequent encroachment. Again, this isn't where you would trade, right? The strategy teaches you to wait until 10 a.m. or even later to take a position. And this will get proven today. Today, again, we had zero news. So nothing could make price action just bounce out of nowhere, okay? So do notice, please, there is a 5 minute fair value gap here, or market structure shift that happens up here, right? We trade up here after the I guess the sweep of this fair value gap, but it's not even a sweep. It's just tapped into that fair value gap. We kind of come up, again, institutional tap again, come up, distribute up, and I don't know if I consider this a proper market structure shift, because if you really look at it on the 5-minute, it's wicking. What about the 15? You're asking, right? 15-minute, it's also wicking. Okay. What about the 30? 30 is valid. The 30-minute is valid, right? So, okay, that's valid for me. That's fine. So I mark that, right? And so what does the strategy teach? It teaches you that you should draw your OTE, right? We're going to just delete the standard deviation for now. You should draw your OTE here from the swing low to the current swing high, right? Whatever it stands. So this is the swing low. Let me just OTE. That's the swing low. And then we get a market structure shift around here. So no swing high, no swing high. We're waiting. Swing high here. Okay, so that's the current swing high that we have there. Notice how we got that. Boom. No swing high, no swing high, no swing high. Swing high here. We get a swing high. I mark that. Okay, so now what am I expecting? I'm expecting this price to do what? To come down into these levels. It doesn't do that. Okay, and you might be wondering, French trades, why aren't you taking this? Well, buddy, there is no swing high. Like this candle, right? I hope you know. Market structure shift here didn't happen until these candles closed up here. And this candle is the one that got traded all the way down. I don't even know what happened here in 955. I don't even know what happened. This was crazy, right? But there's nothing that indicated, except this market structure shift on the 1 hour, that indicated such a liquidity pool to be drawn all the way down. So this to me now doesn't matter. And actually the only thing that does matter is that it went all the way down into these wicks and got bought all the way back up. Okay, so that shows bullish entrapment to me. So again, swing highs here, current, okay? But then it comes down and then there's another swing high that gets created here. So that's the new one. And it comes down, another one, high, and then another swing high up here. Okay, so that's a new one. So price is now everywhere, right? It's bouncing up and down. You're just waiting for price to come down. That's all you're waiting. It comes up, comes all the way up, creates that swing high. Okay, so now you mark that swing high, okay? And you're still, I'm still debating. I'm like, okay, well, is this going to go lower or is this going to go higher? And once you notice that price makes that swing high up here and it starts going down, and you see very strong distribution, I want you to know where it happens. What's this line? What's that? That's the swing high of the month, right? That monthly swing high that we've been waiting for, that we've been testing this whole time. And so price on this distribution broke out of this, went all the way up here to some kind of PD array or just kind of return on its own. It came all the way back down, right? And so that's when you draw your OT. And if this made another high, swing high, you draw your OT there. It just doesn't stop, right? And so what do you notice? There's also this 1 hour. If you go to the 1 hour, what also happened? This 1 hour market structure shift also happened. So this makes two market structure shifts currently valid. And this actually would technically be a 5-minute, 30-minute, because it was concurred on the 30-minute. So anyways, now you have this whole range, okay, created. And I wish I could show this simpler, but you have this range. Whoops. You have here to here. Oh my God, I did it wrong. Here to here. That's the current range. And why is this not off? Okay. Got it. So anything in this zone, you can sell. Anything in this zone, you can buy. This also shows in the 0.5. Sorry. So it sweeps that monthly liquidity up here, and then it starts coming down. You can see that aggressive selling pressure coming from the sellers, and it starts coming down, and then it hits that 0.5, right? That 0.5 up here. Let me hide this for now. Okay, so now it can get bought But has it reached any of the levels that we are interested in? No. Because of the fact that these levels have already technically been traded. Now, the fact that this is even there is incredible because these lows were made before the swing high. So somehow price knew that it was going to tap into, like, it's crazy to me. I don't know how to explain this, but it was like seeing in the future in a way, if that makes sense, if that really does make sense. But yeah, it might not. So here it can get bought. Great. It's in the discount, and it does. It gets bought up a little bit. And then this is where you wait, right? This is after 10, you wait. I like to take trades off the 0.5 if price does like to do that. And you see this all the time, right? It gets under that discount, it starts buying, but it's not going to buy out of nowhere. Right? It's not going to buy this whole move back. Yes, it hits that liquidity, but that doesn't mean that you should just start buying all the way. And the fact that this doji candle came all the way down here just proves to me even more that this will not get bought all the way back up. Okay, so we wait. It bots. And this sells, hard sell. And guess where this sells? All the way down to the OT level, okay? I do want to point something out. I know Keegan is probably watching this video, and if you are, thank you. Actually, props to him, right? We're in this market game, and he's he's almost at fucking $1 million, bro. Like, just look at everybody else. I'm down here because I made some really poor choices, but $785,000 in this game is completely wild. So props to him. But I know he was talking about like a fib. He uses like a fib like this, the fib zone. I'm pretty sure that's his levels. I'm probably going to ask him. But this is what it would have looked like, Keegan, if you drew your fib in that zone, right? If you took the trade. It wouldn't have been perfect. Your entry wouldn't have been perfect because the price actually came down and it wanted lower, right? And I'm not saying the OT is better, but it proves that the OT here, the price wants to come down to this level, right? And there's definitely some kind of, let me try to find it. There's probably a 1 minute PD array in there. Fair value gap or some shit. Let's see where price wanted to go. So there's a 1 minute fair value gap here. Is there a 3 minute something? No. Is there a 1 minute order block? Sure, here, but price doesn't come down to that. Okay, no worries. You just look at the price action on the 5 minute, right? Because that's where we're taking our trade on the 5 minute. Anyways, so hypothetically, you take your trade here, long, on the golden zone. Okay, the first thing you should do is your stop loss, right? Because this low is down here, I knew that my hard stop was here at this low because this is so aggressive that I don't know if price will come down and try to reach that. So in my mind, if price even came down to this level, it would be fine, right? My stop wouldn't be here, okay? Because to me, because this price sold so early and it did get bought off, but because price came that low to this low, it just proves that there's like, in my mind, this is what I'm seeing in a way. I'll show you. This is what I'm seeing. Because price came so low, I'm willing to see price come down and to reach this level. So if my hard stop is here, sure, I wouldn't have lost anything, but I wanted to give it some room, right? Because I see price coming down to here, and I see that it could be reversing from either the 0.705 or the 0.79, right? So my hard stop is down here on these lows. That's my hard stop. My mental stop is anywhere between there. Like if it starts going down, that's my mental stop. Don't care if it reverses. That's my mental stop. But that's what I'm seeing. And then take profits, right? In a way, here, you can have 2 standard deviation. Can you not? You can have one from the swing low to that 5 minute standard market structure shift. That's one, right? And this is the one that lined up. This is where I took my take profits, right? The consequent encroachment of the -2 to -0.5. That's the consequent encroachment. I took profits right up there. So let me draw that. It's like consequent encroachment right around here. And as you can see, take profit got hit by a tiny bit. But you could also take your standard deviation from that swing low to this market structure shift, right? And what does that give you? Approximately the same thing. But notice that -2, right? This Jesus Christ. This will try to continue higher, right? Because if we try to do this, see if it draws. Okay. It went into the zone, but it hasn't reached the consequent encroachment. Right? But do notice, if you were to do the standard deviation and your target was now this up here, first of all, your take profits would have already hit from this and all that. So you'd be on your runner, and this would be your runner, and your break even would be like up here or some shit. So in my eyes, this is still a good trade if you want to go higher, right? But the reason why I did the 5 minute here is because I knew that obviously the standard deviation would be smaller. And another tactical thing is this. You see where the -4 is, where this long projection is? That's the second liquidity target for the swing high of this month, or the last month or whatever. Not even last month, like months ago. That's another liquidity profit, that swing high. That's also marked out here. Almost hits the barrier right there. But if you draw to the 1 hour, look where it goes, way above. I don't think that's right. And it's lower, like look how big it changes, right? Huge change. The larger the move, the bigger the change. So I knew that I wanted to target somewhere above at least this high, right? And I knew that there was nothing here to back us off, right? So there was no liquidity target. So when I'm unsure of these situations, I don't want to take a huge swing, you know, a huge like play. I didn't even know this was going to happen. And to be on the safer side, right, do remember that today we didn't have any news. So what were we supposed to do today? We were supposed to consolidate, right? And so I didn't want to be that dumb fuck that took an awesome trade, but that got stopped out right away because price all was doing was consolidating. And I had my standard deviation set all the way up here, and my take profits were like way above here. And I'm like, I just look stupid now, you know? I wanted to keep it short, nice and simple, you know, like it is like, I'll take this trade any day, right? This is good. The only thing it could probably improve was the spot of the market structure shift and probably the quarterly theory. Oh yeah, coming back to this, the hard stop was here because the New York lows were here. And so I didn't know if price wanted to come down and sweep those lows from the 930 open. So if it did, I didn't want to be in that position because it could go higher or could go lower, right, to reach that consequent encroachment, which isn't an ideal because it would break this OT level and it would break the order flow and price action and everything I know about it. So, and I just didn't want to be involved in that. That's why I also didn't take that's why my hard stop is here so low. So that's it for this video. You know, I guess you guys learned a little more about the quarterly theory. If you guys have any more questions about how I use it, you know, again, a little disclaimer. The quarterly theory isn't like a strategy. It is a strategy to use with your current strategy, like that should be with ICT concepts, right? You shouldn't just use the ICT, like the quarterly theory concepts alone. That in itself doesn't work alone. Some people do, and that's fine. But for me, the strategy that I have developed, or I'm developing right now, doesn't work alone with just it works alone with the quarterly theory, but I can't just use the quarterly theory by itself. Does that make sense? So from time to time, you'll see me drawing these lines, right, the quarterly theory, and using them for my advantage. In this case, it gives me a better understanding of the order flow that's going through, right? With the quarterly theory in hand and the ICT comp sets that I know, I can use that to my advantage and take a trade, which is what I did today. Okay? I hope that helped. If you guys have any questions, please let me know.